Welcome back to the Accel Advantage podcast, where we talk through decisions that our business owners face every day around risk, money, and growth. I am your host, Corey Riekers, and today we are joined with two of our very best when it comes to insuring dealerships, Ethan Thompson and Kaleb. Fellows, welcome to the podcast.
Thanks for having us, Corey. Happy to be
Morning.
here.
All right. Before we get into today's topic, I think we need to get things kicked off by giving the audience a little bit of background on why you two are so qualified to talking about car dealerships, RV dealerships, sport and recreation dealerships, and equipment dealerships, and literally all things that are tied to garage insurance. I've personally had the pleasure of working with Ethan at a large national insurance company for about 6 years prior to coming to here at the Accel Group. We've worked together for the last 7. I'm going to have Ethan kind of get started with some of the introductions and how he got started in insuring dealerships. Ethan?
Sure. Thanks, Corey. Again, happy to be here. Again, Ethan Thompson. I actually, ironically, grew up in a dealership at a pretty early age. And as I kind of jumped into my career in insurance, as some of my mentors, encouraged me to pick a specialization or a practice, I naturally kept going back to the dealership realm of things. And as Corey, as you mentioned, worked with you at a national carrier who specialized in this space with a direct writer, and have been on the independent channel side of things here since 2019 with the Accel Group. I have a good fortune of leading our sales team here at the Accel Group, as well as leading up our Accel Dealer Services practice. So, here at Accel, within our Accel Dealer Services unit, our goal is to help dealers, protect their balance sheet and operate from a risk management standpoint. And so we're very, very steadfast in that mission, and we're here.
Ethan's pretty modest. He's done a tremendous job since coming on board here since 2019. We actually today insure a little over 50 dealerships across the Midwest, and a lot of that has to do with Ethan's leadership. So appreciate that, Ethan. Kaleb, how about yourself? You were actually in the car dealership business prior to making the move into insurance. Can you give us a little context, a little background on how that can be?
Yeah, I enjoy going to the dealerships now. I joke that I'm the washed up car guy. So no, I actually, I spent 10 years at the dealership, local dealership here in Iowa, multiple site and dealt with a few different franchises, and just a great opportunity to learn that side of the business. So I started off selling and then made my way to F&I and then took over the front end and managed the dealership there. So lots of real world experience on that end. And then ironically enough, ran into Ethan, just kind of spitballed some ideas, and he explained his affinity for dealers and what he does. But also, kind of addressing this idea that it would be good to have a guy that had been on the other side of the table, to have that connection with other dealers. Cause there's just things that come up that unless you've lived that world, kind of tough to understand sometimes, right? And so, I work with him now as far as, property, open lot, umbrella, a lot of the things that dealerships are going to deal with from, just a structural standpoint when it comes to insurance. He and I work hand in hand, man. We have a lot of fun with those guys. But yeah, I 10 years and now we're in insurance, baby. So it's fun.
Yeah, it's been awesome. It's been fun to see you grow over the last 2 years. You've hit the ground running, and you two work very, 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 very well together. There's obviously a natural synergy amongst you two, and you do kind of exemplify one of the core values we have, which is laugh, which you probably will see in this podcast today. We have a lot of fun here. So, all right. So one of the topics that we wanted to hit on was a bit about the potential stereotype that comes with car dealer partners that they only buy on price, which I know all three of us would personally disagree with. But for those who are kind of still on the fence, maybe still buying solely on price periodically, can we talk a little bit about why that doesn't always work out long-term for dealers? I've heard you both say before that insurance really isn't or should not be considered a cost item. It's more about capital protection. Maybe let's start there, guys.
Yeah, no, I think what's interesting, Corey, is as long as I've been in this business and worked with dealerships, at times have counterparts or other industry cohorts in insurance be like, why car dealers? They shop every year, they're very price sensitive. And just to your point, I have a completely different frame of reference with how the dealerships operate and how they value their insurance program and how they utilize it. And what I think is very unique about the industry, particular to dealers, different from maybe a construction firm or manufacturing firm, there's a lot of direct writers in the space. So rather than going through the independent channel, they can go directly to the carrier. That's certainly where I cut my teeth from myself. But one of the reasons that I moved it over to the independent channel, and what I think most dealers experience in their space, in the marketplace, is a high degree of volatility when it comes to insurance for auto dealers. You have a lot of these direct writers that are very prized on a new business forward. So they may come in and give you entry level pricing only to kind of see that continue to rise over the course of time. Our approach is quite different. We have created a environment where we have multiple markets to be able to represent our dealers to, but our strategy is really risk management focused. It's setting up the dealer for success. When you think about a franchise dealership operation, there's a lot going on. They've got a lot of property. They've got a lot of open lot coverage. You're talking tens of millions, sometimes hundreds of millions of capital that's sitting out there exposed to weather events, theft, vandalism. There's a lot of real estate involved, and there's a high casualty exposure. A lot of these dealers have a lot of employees and a lot of vehicles and a lot of people driving their vehicles over the road. So they have a high degree of casualty exposure to consider. And so when you look through that lens, just to that point, Corey, those dealership operation, that's an investment for those dealer principals or those groups. And so from our lens, what we bring to the table is balance sheet protection and peace of mind on that front. I think that what we commonly see in the industry is that some dealers that treat their renewal more like a bidding exercise, they're ones that I would say sit in more of a neutral position. The dealers that I see who I would compare are outperforming their peers when it comes to their risk management program, are ones that look ahead of what their risk factors are. Hey, we've had 3 or 4 slips and falls last year, or we've had a couple instances where our service technicians didn't get oil plugs put back in the vehicle and we blew up an engine. And so really from our vantage point, it's not necessarily what happened, it's the next steps forward to prevent it from happening in the future. And the more that our dealers are willing to partner with us in creating, I'll say, solves to particular instances they may have going on in their dealership, the better we can set them up for success in the future rather than just quoting their insurance. Those dealers who have the ability to control their underwriting narrative. Oftentimes I would say part of the reason our industry peers don't necessarily have the same affinity for dealerships as much as Kaleb and I do, is because when they see the same submission from a dealership operation year over year over year, and the narrative from the agent is really best price wins, it really doesn't set up a great situation for that dealer to get the best terms and conditions over a longer period of time. And so I think it can absolutely create a volatile environment, taking that approach to entering the marketplace rather than operating from more of a risk management focus and really putting themselves in a position to sell themselves to an insurance company on why they should get the best terms and conditions out of them.
And I might add quick, Corey, that part of what Ethan and I have done over the time here too is, having those relationships with underwriters, exactly what he just talked about. Whether or not somebody's excited to see a dealership, typically they know if they see something coming from us, our approach to how we're going to manage that account and how we're going to help them with their risk, with anything, from a loss standpoint, they tend to know us in this space. So to Ethan's point, we don't necessarily go into this from a pricing perspective. It's more, what can we do to help? And then the underwriters know how we operate. So, I mean, it's a good thing, but it's kind of neat to see that come to fruition as we, gain traction and we're working with more people that are experiencing what we bring to the table.
Despite what your audience might think, Corey, we absolutely don't sell it on our good looks. We absolutely rely on our
One of us.
dealerships.
One of us.
We certainly rely on our dealerships to partner with us to really put together more of a strategy and a plan to take them to market. And we see the best results from that approach.
Yeah, you two have done a tremendous job of that since the inception of Accel Dealer Services, really in late 2018, early 2019. It's incredible kind of see what has happened in that market. It's been a very hard market.
Yep.
over the last how many years. And so everything that you guys just said really helps that dealer kind of curb some of those costs. So, I mean, price is still important, but
Sure.
doing all the things necessary to kind of keep those things at bay and really, I would say, articulate what they're doing to those underwriters. So it kind of changes that narrative of maybe a stereotype that maybe they had in the past. So, and your guys' reputation has really grown in a good way throughout the Midwest. And so I've seen you two get opportunities on accounts that you don't even have to make a cold call to them. They're actually calling you
Yeah.
because of what you've done for other dealers across the country. So kudos to you both for that. I do have a question in regards to this hard market. Do you guys both still feel we're in a hard market still, or do you kind of feel that shifting here early in 2026?
Yeah, great question. I would definitely speak for ourselves as an agency, but I'm certain that many dealership operations have also felt a little bit of rate fatigue here the past several years. You know, our industry really went through a reckoning uh there for quite a bit, where insurance companies are really relying on getting back to underwriting profit rather than reinvestment income as their strategy forward for how the insurance companies were going to make a profit. And so, I think that the end consumer has really felt that pain of rapid price increases, really the better part of the last 4 years. But I'm happy to say, leading into 2026, looking at some of the CIAB results, and having a lot of discussions with several of our insurance carrier partners, the market is definitely softening right now. Here in the Midwest, especially in the your cat prone states that are more susceptible to hail and weather related patterns, there still is some rate growth trends that we're seeing. It's trending about 7 to 8% right now. What I would say we're seeing most insurance companies looking for from a rate growth perspective. But as far as other your casualty lines such as garage liability, garage keepers, employment practices, we're actually seeing some rate decrease on those lines. As well as we've enjoyed, at least here in Iowa, and many other states across the Midwest, work comp rates continue to decline. I know that in most states, the work comp rates have gone nearly 50% of what they were. So I can confidently say, Corey, that the market definitely feels like it's softening right now. I think we are in transition period. But I would say for most dealer operations here in 2026, I would expect a fairly competitive rate environment, maybe more so than the last 4 years.
Yeah. Yeah, it's interesting too, because I do think there is some tightening happening in areas. I think what Ethan and I have seen, especially just the past couple years, really, property, umbrella, garage liability, particularly like with wind hail deductibles. We joke with some of our clients that Iowa used to be viewed more like Wisconsin is today, where, it really wasn't an area where we had to worry about weather. And, 2020, the derecho happens. We've had some significant wind events, some tornadoes in Western Iowa. Just some things over the past couple of years that I think, we've seen the trend, at least in Iowa, change a little bit to where we are still seeing some tightening there. So, we're managing that in different ways with our clients, and what we see when we walk into, you know, uh, a person that might be consulting us for business and not with us yet, and we're looking at their policy, and we tend to see some of those things stick out that, we can make some adjustments and give some relief. So beyond the wind hail exposure, some of what we're seeing with the umbrella and the garage, there's just so many aspects of a dealership that come together. Umbrellas have become a little bit more difficult too, because there's just more risk, more exposure with carriers that we're needing to manage that with the dealers as well. So we've just seen some things. Just they're not extravagant, but they're small enough, but important enough that it just takes some management on our end to make sure that those dealers are in a good position.
Yeah, that makes sense. I would say if we kind of pivot more towards uh, the property story, because that's really been the narrative the last 4, 5, 6 years, specifically here in the Midwest. Obviously, we've seen percentage deductibles on the larger facilities climb, 2, 3, 4, 5%. Obviously, in the open lot coverage. You guys want to talk a little bit more about kind of what you're seeing the trend be more into 2026. I know kind of what it was prior because of some of the things I just mentioned. But where do you guys seeing that going right now and kind of moving forward for these dealers?
Yeah, it's interesting, especially just talking deductibles, like you said, Corey. I think, as far as your guys' tenure in the insurance world, you've definitely seen, the 2,000, 5,000, the smaller deductibles when it comes to property that give those guys, the owners, kind of the warm and fuzzies. And as we continue to move and progress with what I was just talking about, as far as some of the stuff that's tightening up, percent wind hail deductibles have become a real thing. So, 1%, 2%, is getting to be a little bit more common. Most carriers are just asking for a little bit of participation, in trying to manage that risk so that, we can be cognizant of premiums. We can be cognizant of a few other items that come along, with making those changes. But for sure, the trend over the market has definitely been moving to a little bit higher deductible in that it's a percent based. So, um, it just makes a little bit of a difference because if you went from a $10,000 deductible, and you've got a $6 million building and it's a 1% wind hail, like, that makes a bit of a difference. So it just takes some management, from us, and also working with, the insured to make sure that they're comfortable with their level of exposure, but also making sure that they're comfortable with their premiums. There's a lot that'll go into that. But, I think that it's very interesting when we look at even 2 years ago, just the manner in which things are changing, going from, that flat deductible to a percent deductible. It's interesting.
Yeah, it's definitely been a shift, and I think that attitude for a lot of dealers in terms of how they view financing their risk. I think when I started in this industry, I mean, I remember the days where a dealer could carry $1,000 flat deductible on a 10 or $15 million building, and they would see a 30-cent rate with $1,000 deductible on their open lot. And so, from a risk financing perspective, it certainly made a lot of sense relative to what the cost was for the dealer to transfer that risk to the insurance company. And as we sit here in 2026, with a lot of the pressures from a pricing perspective in the market, but what also has been pushed downstream from a risk sharing perspective for most insurance companies, most dealers have really had to adopt a self insurance mentality with their insurance program, and structuring it in a way that it makes sense, that it's affordable. But it's certainly caused a shift in, I think, how many dealers had historically handled their overall risk financing with their insurance. I'd say one of the other factors that's really hit home the last few years, especially, is the inflationary measures when it comes to reconstruction costs. Most franchise OEM, franchise retailers, if you will, they've got certain um, appearances to keep up in terms of what their facilities look like, right? And so there's constant reinvestment into those buildings, and so you typically see a higher dollar value go into that. And all we've seen really the past several years here post COVID is an inflationary rise in construction materials between metal and wood, and so it's all come downstream because it impacts, the cost of building just in the same way that it impacts your insurance program because the insurance company is paying to replace the building with like kind and quality materials. And so we've seen building valuations rise, which has really pushed those premium levels up as well for dealers over the past several years. I would say we are seeing similarly a little bit of relief in the reconstruction materials. So one of the things we're doing with many of our clients is yet again reevaluating what their reconstruction values are on their policies. Because for the past several years, we've had to increase those to make sure we're staying out of any danger zone when it comes to co-insurance penalties or anything like that. But now that things are softening a little bit, even in the construction material side of things, it is giving us an opportunity to reevaluate what some of our building limits look like. I'd say the other emerging exposure we've seen that I would say that what I noticed from other competitive agents in the space is really the rise in EV exposure. And when I say EV exposure, relative to the dealer's premises and properties, a lot of dealers have had to invest in charging stations and really specialized outfits to be able to support their OEMs and kind of their electric vehicle venture, if you will. But certainly from a risk management perspective, it creates a little bit more to think about because you now have additional structures. You now have very expensive charging units in the location, and the costs of some of those are certainly of pretty significant importance in making sure that they're properly addressed with your program. And I would say there are things that we commonly see overlooked. Usually, it's insurance is often the last thought, which I don't blame people, but a lot of times we'll walk through and kind of see, that the dealer got a two to $300,000 investment that maybe hasn't been addressed.
I think that's been a big misconception too. Is most people, when they see a charging station, don't realize the amount of money that was invested in that. And then, as Ethan was saying, we'll go on a property and we'll start talking, to business owners, and is that insured correctly? That's because there's times that they haven't been, and that's a big investment when you start to talk to the business owners that have had to invest in that. Um, it's not a small amount of money.
No doubt.
Yeah, I think you guys do a really nice job of walking around the premises, getting a sense of what's been updated. The other thing that really is kind of fascinating, Ethan, when you and I started doing this on the independent side back in 2018, 2019, we were seeing $500 wind hail deductibles on the open lot, even
Yeah.
$1,000, but they may had a $100,000 or $150,000 aggregate on their open lot coverage. And today you're pushing upwards of $5,000 wind hail on the open lot coverage per vehicle. And so I guess as we kind of move forward, there are some things that dealer can do, different types of coverages or tools that they can use that are helping the dealer kind of combat that. And I know that you two talk about this quite a bit with Parametric. Will you two kind of talk through that a little bit and how you're maybe leveraging that with some of your dealer partners
Yeah.
when they do have $5,000 deductibles on their open lot?
Yeah, one of my favorite, it's not a favorite joke, but it is certainly a joke. One of my jokes that we like to talk about with those guys is gone are the days of making money in a hail event, right? So many years ago, it was viewed so much differently. And as you mentioned, the progression of deductibles, and what that looks like and how that changes. There's tools or things that we can do. And one of those tools, as you mentioned, Parametric, basically for anybody that doesn't know what that is, it's just a tool. And it utilizes, technology, to basically measure weather events in the event of a hailstorm. And there's things that, come in as far as information goes of size of hail. And then the event happens, they confirm with a third party resource in the National Weather Service to basically measure the size of hail. And then they're going to pay that claim out based on the specific size of hail. And so, as you mentioned with the deductible structures climbing, that is a tool that we're utilizing with our insureds to basically insure for that big event. So now we don't have to worry about, a large deductible because aggregates have gone away. $5,000 a car. If you've got 100 units on the ground, you can do that math, so we can tailor, a parametric policy to basically cover a dealer for as little or as much as they would like. Um, it's just an interesting tool, but again, it triggers off the weather event. It's very simple in how it's structured. It's not for every dealer by any means. I think that some dealers probably prefer to maybe look at more of a insuring aspect on that end of things. And why I bring that up, part of my experience in the dealer world comes from having been through a hail event. Um, I think that most dealers understand, we're not going to pay a retail number when it comes to getting our PDR dents removed. We need to talk about wholesale. And so some of the conversations I've had with guys that get worried about deductible, that get worried about an aggregate being gone, the question is, okay, fine, you felt warm and fuzzy with that $50,000 aggregate limit, right? But we all know that with your wholesale numbers as far as PDR goes, on a small to medium sized weather event, you're probably not going to get your deductible met anyways with that auto. So I know particularly when we experienced a hail event with the dealer that I was with, there was quite a few cars that we just chose to fix out of pocket and not turn into insurance because it was more cost efficient. And so really when it comes to insurance, we want to make sure that we're covered for the catastrophic event, but we're also being intelligent with our money to make sure, hey, we can handle this event because of the premium savings and what we're doing with how we're structuring our policy. And then when we do have that hail event come through, we're not paying $3,500 a car. It may be more like, 8 to 12 or, whatever that number comes down. But those are conversations that we're having with those guys. And then, if they want the ability to be comfortable when it comes to their exposure with the deductible, that parametric will cover any deductible, right? So it's going to be open lot, it's going to be property, any cost that they would incur from a hail event, Parametric could in fact cover them for that.
Yeah, it's been a helpful supplement to Kayla's point. Not every dealer is in the same maybe realm of life in terms of what they have just in cash reserves to address a catastrophic storm. And so, there are certainly still markets out there that are not in the high pressure hail and wind zones that still pretty easily can secure a $1,500 deductible. But to Caleb's point, when you talk about even where those wholesale PDR costs go, a lot of times you get into a $2,500 deductible per unit scenario. The deductible is not even, you're not even going over what,
Yeah.
where the PDR cost is at. So you combine that with the factor of like, not only do you have an increased exposure just with what your self insurance is, with that deductible on your open lot, but you pair that into a scenario where maybe you're also now facing a percent deductible on the building in and of itself. One event can be a fairly significant cost item for any dealer in that scenario. So we've been utilizing the parametric as a supplement to right fit it to many dealers who prefer to transfer more of their risk rather than retain it. It's a very unique product. It doesn't necessarily work like a standard insurance product where it's you incur physical damage and then the damage is assessed, and then if the damage is repaired, you're remitted payment for it. It's really an if this then that type policy. So if hail
Yeah.
is measured, then the claim gets paid, and we don't have to provide any necessarily proof of any physical damage. So it's a unique supplement that I know many dealers, depending on their circumstances, have taken full advantage of.
Yeah, it's a great tool, and I think Caleb, you said it earlier. Not everybody is looking for that first dollar coverage, and but I think it's nice for that dealer is that you don't have to provide a lot of information. It's first dollar coverage. They cut the check for it, whether it's 100, 250, $500,000, and it provides some relief on a large cat loss, especially cash in hand, pretty quickly to get some cars moved. So I'm gonna switch some gears with you guys on some emerging trends. I know back 18, 19, 20, Ethan, you and I dealt with this a lot with a lot of our dealers on cyber funds transfer fraud. Those were really hot topics at that time. I'm reading and looking at more of an emerging trend on transport fraud. Can you kind of address that and kind of some things that you're maybe educating dealers on to maybe equip them to handle that here moving forward?
Yeah, no, absolutely. I think that, with anything as trends emerge, so do the criminals do the same thing. They figure out different ways to try to unfortunately rip people off. And what we're seeing right now, and it's not even just specific to automotive dealerships. I've had some claim scenarios with some power sports and equipment dealers who are dealing with something very similar regarding that just as you said, Corey, that transporter fraud. So what we're seeing right now is an organized fraud rings that involve really spoofing motor carrier numbers and basically intercepting communication between a motor carrier transporter and the end user. So I just dealt with one specific instance, even where the client arranged their own shipper, to ship a vehicle from Iowa to another state. And the transporter that showed up was fraudulent. And so vehicle's gone. And here we are with a vehicle that's basically been ripped off and intercepted by a transporter. I would say it's becoming somewhat of an epidemic in the industry. We're seeing a lot of industry pundits kind of address the conversation, as well as I would say at this point, we're getting nearly weekly calls over concerns, whether it be that they've got an active situation going on or growing concerns around their own exposure when it comes to the risk. So, in discussion with one of our key partners and prominent carriers in the dealers open lot space, they cited to us that they paid over $15 million in transit theft claims in 2025 alone. So, as you can see from that number alone, it's a pretty big issue in the industry. And the reason from our lens as to why it's become such an issue, it's a few different factors. Not as many control factors, maybe at the dealership level, in handling a transporter or shipper when they show up to pick up a vehicle. And then similarly, if they're handling their own shipment, generally speaking, the cheapest price wins. right? Like anything else, they may look at picking the cheapest transporter rather than establishing a consistent and trusted relationship with a transporter or a logistics company that they know, they trust, they know has adequate insurance to cover them in certain events. Um, the other piece is again the weak verification. I've talked to many dealers whose practice is if a shipper shows up to pick up a vehicle, as long as they know the information, they toss them the keys and away they go, right? And so, really, the recommendation and what dealers should be doing is creating standardized operating procedures around how they handle transports and shipments, right? And verifying motor carrier numbers, confirming certificates of insurance directly with the brokers, ensuring that they have coverage for false pretense issues just like this so that there's no real gap in coverage. If an event does occur, that there's at least primary coverage with the transport company. Because a lot of cases, we don't know where that communication was, where it was ripped off from. Did it happen at the dealership level? Did it happen at the transporter? A lot of things to work out in that scenario, really between insurance companies. So making sure that the shippers that are coming on, taking our vehicle to our end customer, ensuring that they have adequate coverage in those types of events. Establishing those delivery confirmation protocols to make sure that the vehicle is getting to said customer. I've heard some dealers utilizing GPS tracking systems in any units that are being shipped. So in the event that something is intercepted and goes away, they at least have the ability to kind of track where said vehicle is going. And then additionally, tightening some of the contractual risk transfer. So those contract documents between you and your shipper on the bill of lading, again, making sure that if whose responsibility is what in the event that um, dispatch is perhaps intercept it, making sure that transporter will be held responsible in those scenarios. And then again, verifying information, taking copies of CDL license of the driver who shows up, calling the brokerage firm to confirm the details to make sure that the person who arrives at your doorsteps is the person who they say they are before we part with one of those inventory vehicles. I've heard some dealers really just take a pretty avoidance position of it as well, which is we're not going to handle any transports. If we have any customers that wish to have something shipped, they put the onus on the customer to align or line up their own shipping in that endeavor. We've also seen some other. We have a carrier partner that provides a service when it comes to brokering uh, shipping transport specific for auto dealers. So that particular carrier is throwing in endorsements in their policy now to really benefit the dealer from going through a vetted shipping company to make sure that they can avoid some of those theft issues that they're commonly seeing right
Yeah.
now.
And I think it's interesting to Ethan's point and some of what we're seeing and hearing. It's not so much your larger trucking firms that are picking up vehicles from Chevy or Ford, or anything like that. Where we start to see trends and issues are it's individuals that are wanting a vehicle shipped, right? And so to Ethan's point, verifying with the driver, because there's been times like in my experience, even at the dealer level, somebody shows up to pick up a vehicle that we agreed via phone, internet, DocuSign, all the things that we used to do, and somebody shows up for the vehicle and you hand them the keys and say thanks, right there. So what are you doing to vet that driver? And um again, not so much the delivery drivers that are showing up with a car or a trailer load of new F-150s or new Chevys or whatever it is, right? It's that seems to be that single point. One vehicle is sold and somebody's transporting that. Well, who's picking it up and does it look to be a legit outfit? There's some due diligence that needs to be done. So we work with some of these business owners to maybe train on, the sales managers and the salespeople to what are you looking for? What are you seeing with the carrier? Are you getting the proper documentation? Is it who they say they are? Confirming with the customer, confirming with the carrier, all of that. There's a little bit more due diligence that needs to be done on that end compared to what used to happen where it's you pitch them the keys and say, thanks, enjoy your ride.
Yeah, this goes back to where we started the podcast on, finding the right advisor, right consultant that understands these type of things and can
Yep.
give the right counsel. Honestly, not just the dealer principal, but to all the people that are involved in that day to day. Because usually it's not the owner. So, I think all that's fantastic. One of the
Right.
things I was going to say, we are getting close to time here, but I do want to have you guys hit on a couple different things real quickly. the commercial umbrella pressure that we're seeing in the marketplace, specifically with nuclear verdicts. And then lastly, every dealer's favorite subject, which is driver control or MVRs. Um, can we talk on those two subjects real quick, and then we'll get her wrapped up today.
Yeah, just as far as umbrella goes, I think one of the things that we're seeing, some of the social inflation, nuclear verdicts, real pressures. I think the other thing that people often forget is, some of the jurisdictional um, verdicts that are coming out that people kind of know what to look for now. The first thing that you're going to get in a situation like that is, can we have a copy of your policy? And they're going to see which lines they can exhaust immediately. And so one of the things that we see particularly on our end is when you start to see somebody with maybe too big of an umbrella, um, that can actually create a problem, because if you do have an issue or you have something happen and you have a loss, and unfortunately they do happen, again, the first question is, can we have your policy? And they're going to look and see which lines they can exhaust. I think, Ethan, well, we both have experienced some real world scenarios, but we had one that was particularly bad for a dealer in the event that they had an accident. And well, I'll let you tell that story. Ethan, go ahead.
Yeah, no, right on. I mean, I think by and large, what we're seeing is we're seeing a lot of insurance companies really peel back what they're willing to offer from a capacity perspective. And so where that's concerning as a dealer is just making sure I can get enough cover to really cover what I think is a reasonable exposure for my dealership. Um, but it is creating there's capacity and pricing pressures kind of rising in the insurance industry, and it's fueled by this emerging trend of loss litigation funding as well as social inflation. And
Hmm.
really, in layman's terms, all that means is you have private equity money pouring into these attorney firms that, just to Caleb's point, are really seeking some large third party claims that are out there. And the first thing they're asking for is copies of the insurance policy. And next thing you know, the demand letter really lines up with that 20 or $30 million umbrella policy. So, from a practical perspective, most insurance carriers are peeling that back in terms of what they're willing to offer. We've certainly taken a similar approach with some dealers that may have carried a little bit of an excess coverage and merely right fit it for the current times, but also really take that target off of the back for many of our insureds. The particular instance that Caleb's talking about, outside of just looking at the limit of itself, is really looking at what the underlying coverage is picking up. We
Hmm.
had we had one dealer that was more of a prospect of ours, but one of the things that we saw happen to them is that they were really taken to their knees with their insurance program because their underinsured motorist coverage was endorsed as an underlying coverage on their umbrella. Now, for those that do or don't know about underinsured motorists, it's effectively picking up bodily injury for anybody who's operating an owned vehicle. Um, in this particular instance, there was a demo vehicle and there was a passenger and said demo vehicle that was furnished to an employee. They were involved in a not at fault accident. And because of, I would say, the scenario of some of the attorneys involved, they utilize the dealership's program through that underinsured motorist program has some recourse for the bodily injury that happened to the individual in that vehicle. And so in this case, they were able to get access to their $20 million umbrella. So that's really kind of a warning sign, just to make sure that you understand what is underlying on your commercial umbrella and whether or not it makes sense for it to be there. So really what we're partnering with many of our dealers right now is reassessing what our strategy is there, making sure that
Hey, Ethan, to interrupt real
yeah,
quick, and I think the main focal point there is that is not within the dealer's ability to be able to control. That's why those conversations need to happen. The dealer could not control that particular scenario, and they were still brought to their knees. It was outside of their control. So I didn't mean to interrupt, but I just want to make sure. I mean, that's a point that we really hit with our dealers is,
no,
is this a risk you can control?
kind of rolls into another topic too that really implicates that umbrella, which is driver controls, and
Hmm.
making sure that we've got appropriate drivers in and out of our vehicles.
Yep.
as well.
Yeah, I think, some of that is interesting to bring up, Ethan, because one of the things, from a dealer's perspective is, the annual MVR polls, written eligibility standards, if a dealership is still offering demos, having, clear and concise written policies and procedures, and then documenting and enforcing everything, right? So there's so many things that in the dealer world, especially even when I came from, that were, we maybe just breezed by and didn't necessarily think to give some extra thought to it. Because you're hyper focused on selling cars, right? Like that's
Right.
the most important thing.
Yeah.
But when it comes to the
The best sales
management,
manager I've ever seen. He's got to drive, right?
let's go, right? Well, yeah. So at the end of the day, being able to have the ability to look at those MVRs and get the thumbs up, thumbs down, green light, red light, your drivers in good positions or not. I mean, you might fall into a situation where you've got a guy who's ineligible to be driving and you had no idea, right? So making sure that you're doing the due diligence on the front end so that we're not having to clean up a problem on the back is so much more important. And those are just some of the resources that we're basically going in and discussing, and the dealership, the principals and the general managers and the guys that are in charge of these policies are kind of opening their eyes going, oh man, like we need to be doing more of this because, one loss can equate to a pretty significant premium increase, right? Because your loss history is affected, and then all of a sudden you become less marketable to, insurance carriers, and showing that you're doing the due diligence, the best practices, the written policies, things that we can present in factual form to the carriers to then, put their best foot forward to get them in the right position it's been key. So
I do want to just mention we do understand it is very challenging to find qualified technicians.
yeah,
I know a lot of
No doubt.
dealers are very
yeah,
adamant about making sure that some of those folks could drive. We get it. I know Caleb knows that from experience.
Yeah.
Being in a dealership for 10 years, and so there are some things that we work on with those underwriters. But just understand, you start to have some claims on that liability side. There is a frequency perspective that they can put in to that policy on the auto liability. There are some carriers that rate off of that. There's others that don't. It kind of depends on kind of knowing some of those nuances of some different carrier partners. Which again just goes back to working with someone who's an expert in the garage business and understands how to navigate some of the underwriting discussions. So, I guess, guys, let's kind of close it up today. We've talked about a lot of different topics. Um, is there anything that you two want our dealers that are maybe listening to this podcast today to know and understand, and maybe things that we can help them with moving forward?
yeah. I think coming from the auto industry, I understand the necessity to feel like you're not getting taken advantage of, right? That's the one thing when I walk in the front door, they don't want to feel like they're being price gouged or taken advantage of. But I think once we open the book and start to share the resources and some of the things that we have, the one thing that I would always say is, let's stop treating your renewal like a bidding war and going to 6 different car dealerships to get the best possible price, and treat it more like, the positioning, strategy. So making sure that you're marketable to carriers. And I am not advocating to just stick with one guy forever for 10 years and never get a price. That's not what we're saying. But what we are saying is, going to market every single year and just throwing it out there to every single carrier that handles auto dealers can be exhausting. And eventually you're going to burn those bridges. So I think that having that trusted relationship and then seeing on the backside that does in fact pay dividends, once they realize because it takes a couple years, for that to take effect, if that makes sense. Because if you've seen the same dealer 3-4 years in a row, well, of course something's going to change if you take 1 year off. But if you give it a couple years and then fall back into that strategic positioning, I promise you that'll pay dividends. And we've seen some people that have taken advantage of that. So I guess that would be my point.
Yeah. No, well said. I think my recommendation on top of that is really understand where your blind spots are at, right? It's not just buying insurance. It's really evaluating where you're at from a property exposure, what your protocols are for, like we just talked about, some of your transportation, fraud, kind of where your umbrella and driver controls sit in at. I'd say that dealers that win in this environment, they partner with a specialist in the space, first and foremost. But they also develop a risk strategy. They don't just buy insurance. And so I think it's a simple, I'd say, mindset shift when it comes to handling this part of your risk transfer. That's super important. And as Caleb said, kind of get out of the scope of treating it like a bid anymore. I think will serve most dealers in a positive way.
We're not just pretty faces, Corey. We understand things.
or great athletes minus pickleball. Just saying. No.
Yeah.
All right. Well, let's get it close up today. Again, thank you too for your knowledge, expertise, everything that you're doing for our dealer partners throughout the Midwest. You two do a tremendous job and have really just, I would say, changed the narrative the last 7-8 years and how a lot of our dealers buy their insurance and looking at it as a true partnership. And so I just can't thank you two enough for what you're building here and how much you're helping some of these dealer principals throughout the country. So, all right, everyone. So if you'd like to learn more about the Accel Advantage, please check us out at acceladvantage.com and make sure to follow us on Facebook, LinkedIn, Instagram, and our other social media outlets. So we would love your feedback. So please leave us a review, subscribe, and share the content with anyone you feel would benefit from what you heard today. So again, special thank you to Ethan and Caleb for joining us. And so remember, at the Accel Group, we've spent nearly 100 years helping business owners protect what matters most. We'll see you next time here on the Accel Advantage. Thanks again, everybody.